Greetings everyone, I hope you're doing well. We're here with session 6 of our price action training series, and in this session we're going to talk about the future trend and the prediction we can make regarding the future price trend based on the weakness and strength we're observing in the current trend. In the previous session we talked about trends. We provided an objective definition of a trend and said that we expect to see a pause or a trend reversal in price at the peaks and troughs, or those support and resistance levels we found in our higher time frame within the trading time frame. Now, from here on, it becomes important for us whether I'm observing weakness as I approach a resistance or support level in my trading time frame to enter a trade, or if I'm seeing the price approaching my support and resistance level with strength, making a breakout more likely, or the level holding, or a trend reversal. What we're going to discuss regarding the future trend, as I mentioned, is the strength and weakness in the current trend, because we can't actually predict the future trend. But based on the weakness and strength in the current trend, whether it's bullish or bearish, we can figure out which way the future trend is more likely to go. Current price action can provide us with some signs of weakness or strength in bearish and bullish forces, which we discussed in the first sessions regarding bullish or bearish forces, relating back to the decisions traders made to buy or sell. Now, we can see some signs of this weakness and strength in the current price action, and based on those, we can understand which side is more likely to take control of the price trend from here on. The future price trend is more likely. I need to remember this, to memorize it. By memorize, I don't mean we're giving you a rote lesson here, or that you just need to memorize this to become a good trader. It needs to become second nature to you. When you look at the chart, you should be able to see the current trend and recognize that, hey, my next trend will be in the direction of the force that currently has more strength. Meaning, if I have an uptrend and it's continuing, showing even more strength than before, that it's much more likely to keep going from here on out. In other words, the stronger the trend gets, the more likely it is to continue moving upward without reversing anytime soon. And if I'm seeing weakness in one direction, like seeing weakness in sellers, for example, or weakness in buyers in an uptrend, my main expectation is that the future trend will continue in the opposite direction of the current one. Now, as we move forward, you'll understand. Overall, this sentence summarizes the 2 points I just told you. The market moves in the direction of strength and against the direction of weakness. So if I have an uptrend, I always need to check 2 things. When reaching a resistance level, is the strength of the uptrend increasing or decreasing? Meaning, is the buyer's strength increasing or decreasing? On the other hand, is the seller's strength increasing or decreasing as it approaches this support and resistance level? So I can decide which side is gradually losing power and which side is gradually gaining it. We'll go to the chart and get a real feel for these. To identify weakness and strength, I don't want to drag this out. We need to examine 3 things. The force of movement, which we call momentum. Some of the indicators you've worked with so far, like the RSI indicator, show you momentum or the force of movement. But here, when it comes to price action, you're supposed to understand whether the force of movement is increasing or decreasing simply by looking at the current price, without needing that indicator. And in a way, you could say that for that indicator, the candle first has to form, because what are indicators or oscillators generally created from? They're created from price movement, meaning I have a formula that builds this indicator or oscillator, which itself uses the price candles that are forming as one of its components. So the indicator definitely has more lag compared to me looking at the chart from a certain point and realizing that momentum's increasing or decreasing. It's different from waiting for the RSI the candle has to open and close before I realize the last candle must close for me to see an update on the RSI or an update on the moving average, for example. But here, I'm identifying the force of movement or momentum in real time. The second point for identifying weakness and strength is distance and depth. The distance that a price leg, last session we talked about trends. What did they consist of? Of price legs and corrections that happen successively. Now, the distance each price leg covers in an uptrend or a downtrend, whether it increases or decreases, can indicate the weakness or strength of that trend. What is depth? Depth is the amount of a leg that a correction covers or actually corrects the price. Let's see. I had this one price leg that, for example, moved the price up, 3%, or say $30. Its correction is $10 of this, 10% of this, 20% of this, 30% of this leg. What percentage of this step is it correcting? In the more the depth of corrections increases in an uptrend, well, it shows that power is gradually falling into the hands of the sellers. On the other hand, if the distance of each step compared to the distance of the previous step it's covering becomes less than before each time, again, it could indicate that the buyer's power is gradually decreasing in this uptrend. Let's go to the chart. Let me give a brief explanation about distance and depth, although I'm going to talk about them more thoroughly later on. Look, I have an uptrend here. Where should I look? Here. When I talk about distance, the distance of each step, meaning right now I have a price movement step, the bottom of its fluctuation is here, its top is here. My chart is regular, guys. Based on the amount of price covered, I'm seeing the size of each of my arrows or the size of each step. When you go to the logarithmic chart, calculating this distance and depth might cause you problems, especially in higher time frames. Look, now these two steps that I have, one step forms further ahead and one step forms here. Now each of these movement steps of mine, let me check these first three, the first, second, and third. The first and second, I see the distance covered has increased a bit. The third, again, the distance covered has become more than the second. And the fourth, the distance covered compared to the movement step before it, or the third step, has become even more. So the more the distance each step covers increases, as a result, I can say that the strength of the uptrend is increasing. Although I shouldn't look at it as a single component anymore. There's distance, there's depth. We should also consider the movement force or momentum, which is even more important than distance and depth. Now, what do I call depth? On the other hand, I come and look at my correction steps. Let me clear these. Well, correction step. Well, not exactly. The correction that happened for each step. I look at my correction, my first correction, then I come and look at my second correction. This correction, what percentage of the step that the price moved does it come to correct? How much does the next correction correct? Naturally, the next correction is a weaker correction. So I can still hope for the price to continue to rise. How do I know where the bottom of the correction is? I should recognize the swing low candle by now, which I explained in the previous sessions. Now, let's move to the next one. Look at my next correction. See what percentage of this leg it's correcting compared to the two previous corrections. So I gradually realized that the seller is also entering the game here. So this became the depth, the amount of correction that occurs from each price leg, and distance became the length of each of my price legs. In a downtrend, it's the exact opposite. Distance becomes the downward legs. I see if their size is increasing or decreasing, and my depth is the depth of the upward corrections. Relative to each downward leg, what percentage the price corrected upward, that's my movement depth. Let's get back to our main topic, which is momentum for now in this session. Momentum, or kinetic force, it's misspelled as muntum here, kinetic force or momentum. Observing price movement. I'll give you a definition of momentum. I think, for example, in various trainings taught in Iran, especially in Persian, a very tangible definition of momentum hasn't been given to us until today. This word is used over and over again in different books and various training courses. But your mind as a trader, or you who are being trained, is preoccupied with what this momentum even shows me. Observing price movement in the context of price action, we have this definition of momentum. Observing price movement to notice changes in speed and acceleration, and evaluating it to predict the future trend is the literal meaning we consider for momentum. Generally, when momentum is discussed, it means I say momentum is increasing or decreasing, meaning the speed and acceleration of the movement is increasing or decreasing. Let's take a look at, say, high school physics. What was speed? The amount of distance covered in a unit of time becomes my speed. So what does a technical chart even show me? A candlestick chart has two axes. I have a price axis, showing the height of the price movement and how much it changes. I have an axis, a horizontal axis, that shows me time. Now, what was the meaning of speed? The amount of movement the price has made over time. Now, let's go see it. It's better if I explain it to you here. Isn't this price? And this is speed, right? Speed, price, and my horizontal axis is also showing time. Now, suppose the price is moving upwards. For the price to move like this in a 5-day time interval, the price has come from here to here. It has increased by 2.5%. Now, imagine this same 2.5% increases like this. Which one is faster? Based on the physical definition, we have a speed. The second one. Why? Because in a shorter time, it covered the same distance that this price movement took much longer to cover. So from now on, the slope of each upward or downward movement indicates the speed of the movement. If the slope is steeper, the speed is higher. If the slope is flatter, the speed is lower. Now, a classic technical view tells me, look, a sustainable price movement or trend is one that moves at a 45-degree angle. I don't completely disagree, but your mindset should be like this. I'll explain more later. Because when we have excessive acceleration, or what we call maximum acceleration, this candle, this chart, hits a price like this. I call this maximum acceleration too, and a correction's likely. Why is it that for many signals in the channel, we see it reaching our zone, a strange red candle appears, leaves a shadow, and bounces back up? I don't see trend weakness, but I see maximum acceleration here. I'm not afraid to stay in this trade, thinking it's hitting the zone hard. I don't go, oh, I better get out before it's too late, it's gonna blow up. Okay, because our strategy, our big alarm strategy, is data-driven and works based on fundamental data. Before we even get into the technicals, I know with confidence that this level is more likely to work. And on the other hand, I've set my reasonable stop loss. So what's the deal? With maximum acceleration, a trend reversal is possible, and with decreasing acceleration, it's also possible. When I'm about to hit a level at a very high speed, it means the acceleration has increased significantly. Now, what do I mean by acceleration? We're going back to high school and physics class again. Acceleration is the rate of change of speed. How does speed increase? Speed is gradually becoming faster or slower. Positive acceleration means speed increases as time goes by. Negative acceleration means my speed is decreasing. I'm saying it here, of course. I don't have negative acceleration. Acceleration is decreasing. When I say acceleration is decreasing, what does it mean? It means speed is gradually decreasing. Acceleration is increasing. What does that mean? It means speed is gradually increasing. Let's look at the arrows again. Movement speed, my first step, my second step, my third step. Each time the speed is increased. When I see something like this, where the price is curving upwards in a semicircle, I call it increasing acceleration. When I'm checking the speed, the movement speed is high here, and even lower here. Increasing acceleration. How do I show a decrease in acceleration? Price movement. Look, for example, I have a movement like this now. Each time, the slope of my upward step is decreasing. Here, I can say the acceleration is decreasing. Why? Because the speed of the first step is the highest of all. The speed of the second step is decreasing. The speed of the third step is even lower than the previous one. As the speed decreases, I call this a decrease in acceleration. When I see something like this, a semicircle in any uptrend, it's a decrease in acceleration. In an uptrend, when I see the price moving in a semicircle upwards from below, like this, I call it an increase in acceleration. Let's go see an example of it on the chart. Well, for example, let's take a closer look. What exactly do we see here in this particular situation? I'm seeing an increase in acceleration. As it reaches this area, the price is approaching with increasing acceleration. Why? Because I'll consider my steps without even wanting to look at it this way. One step, the first step, the second step, the third step. Each of my upward movements, my upward steps, is happening with more speed. Why? Because I've learned, look, I can't just tell you that a steeper slope means higher speed. Now, I'm seeing maximum acceleration here, and you see that when the price reaches a resistance level, a trend reversal occurs. Why? Because I have maximal acceleration. Now, that classic technical view that said it should move at 40 degrees or 45 degrees is somehow originating from this. This has the same thinking too. But we don't use numbers to measure the slope, saying it'll continue because it's 45 degrees. I analyze weakness and strength from different perspectives. I examine them from various viewpoints. I consider momentum, speed, and acceleration. On the other hand, the distance each step covers, and then the depth that each of my corrections introduces to the price movement. Okay, let's delete this. Let me get to the current price. Guys, we said before to have a framework. In the 4-hour time frame, which is the higher time frame and is our own strategy, we've defined the framework. Right now, the price is moving between this support and this resistance. It's very clear. Now, in previous sessions, we explained how to draw support and resistance and how to find them. I want to come here and examine those points I was making about weakness and strength. We said that once we've identified a support and resistance, a playing field in a higher time frame, we go to our trading time frame and start analyzing the interaction with that level and the uptrend and downtrend between this floor and ceiling. And finally, we get to the trading part of it. Because for now, we're in the analysis phase. Analysis is worlds apart from the world of trading. You might become an extremely good analyst, but not turn out to be a good trader. And there might be some who don't actually have very good analyses, but they're so mentally prepared, they're at such a high level, and on the other hand, they have such incredible trading courage that in trading, you see them making better trades than many who are good analysts. And they're so strong in their risk to reward, in their capital management. But well, the thing is, without any analysis and without any strategy, some people say, they come and say, look, if we assume all trades are 50-50 and we make our risk to reward 2-to-1, we've won in the end. Nah, that's not it. When you make your risk to reward 2-to-1, your chance of winning, your win-loss ratio, is no longer 50-50. A 50-50 win-loss chance is when the price difference where you hit your stop and the price where you hit your TP is the same from your entry point. Okay. It's like me betting on a person, for example. I see someone passing by on the street. I say this person, for instance, from where they are, will either go 5 meters back or 10 meters forward. Is this a 50-50 chance? I should say either 5 meters back or 5 meters forward. What if this guy went 8 meters forward? Then he turned back and went 5 meters further back. Here, I'd hit my stop, right? I don't know if you get what I mean or not. I probably can't think of anything clearer than this right now in these circumstances. Well, let's see what points are left on the PowerPoint. We said we're not talking about oscillators here, or like we're not dealing with MACD and RSI and those things. Momentum isn't an indicator, okay? Momentum is not an indicator. Momentum is not an oscillator. Rather, it's one of the characteristics of price movement, and our thinking and price action should be like this. Instead of resorting to lagging indicators, whose existence I still don't dismiss, because there's a formula behind them, there's math behind them, and many people around the world are using these same indicators and getting results. The important thing is which direction your strategy's in. Unfortunately, we have people in Iran, we have instructors who, just because they only know price action, say this is the good one. The other guy, because he's a classicist, says only this works, that only the head and shoulders pattern is valid. Now, I don't want to sound arrogant, but I see myself as a researcher, a student of this market. I've studied all the different styles, and what I've finally landed on, what I believe is working for me, Moen, at least in the current climate, is exactly what I'm teaching you in this course. So I explained that momentum is speed, or the rate of price change, which is basically the slope of each leg. I don't want to over-explain the uptrend either. In an uptrend, it's just a downward slope, right? Acceleration in a downtrend, if it looks like this, where a downtrend is decreasing like so, what does that mean? It means acceleration's picking up, and each leg of the move is gradually picking up speed as it heads lower. And I already explained the uptrend. Now, in an uptrend, it's the opposite. The first leg actually covers a larger price range. The second leg covers less in the same amount of time. And the third leg covers even less in that same time. When I see something like this, it means acceleration is slowing down. Now, the ideal scenario is when I've identified a 4-hour support level on my trading time frame. My trend on the 15-minute chart is bearish, and it's approaching that 4-hour floor. If I see it approaching with decreasing acceleration, are my odds of a successful long at that floor better than if it were accelerating towards it? So these are the factors that boost your probability of success. They don't guarantee a win 100% of the time. I've given you examples of speed and acceleration. I don't want this to confuse you. It's just the points I've already explained. Increase or decrease. These are the three things I need to look at. We need to compare the momentum of the current swing with the previous one, both in the same direction and in the opposite direction. What does this mean? And then there's acceleration, which I've already covered. What does it mean to look at the same or opposite directions? It means I check the speed, then I check the speed of the next leg, and the slope is roughly the same. I check the speed of the next leg too, and again, you could say they all have pretty much the same slope. Now, as for distance and depth, we haven't gotten to those yet. I just gave a quick explanation so you'd have the general idea. The distance is decreasing, right? But when I just compare these directly, I don't see any clear result. On the other hand, I can check it against the pullbacks. I mean, looking at the same direction didn't give me much data. The speed of the move hasn't really increased or decreased. The slope of the move has stayed the same for each leg. But then I look at the pullbacks. I check the first one, then the second, and the slopes are identical. In my third correction, the slope increases. Meaning, around here, I can see that power is gradually shifting to the sellers as well. But guys, the trend reversal isn't here yet. The low that led to the highest high, this low must break for me to say a trend reversal has occurred. It's this low. Okay. Now we can also draw conclusions from these. When we've checked the speeds of our aligned legs, both in the trend direction and against it, or our corrections, we then compare this with the previous leg. The acceleration of this relative to the correction, the leg's acceleration relative to the correction, the leg's acceleration relative to the correction. Okay? The angle is getting smaller, so as a result, power is gradually falling into the hands of the sellers, and more sellers are being drawn into the market or entering trades. Let's move on to reaching our zones. For instance, I had a resistance in this range on the 4-hour chart. I'll take a look to see how I'm approaching it on the 15-minute chart. Well, naturally, since I moved from this low with higher acceleration, how did I see that acceleration? Look at my acceleration. The acceleration's been increasing, right? Correct. From here on, I see signs of weakness in the uptrend. What does that mean? It means the slopes of my corrections are also increasing. See? The angle between my leg and my upward and downward movements is increasing. Now, here again, look at this slope compared to the slope of the previous legs that brought me to this level. Look at my correction and compare it with this movement. So I'm sensing weakness around here. Okay? As I approach this zone, I'm still nearing it with a move of higher acceleration, but gradually, that good thing for the market bears is happening because their allies are slowly increasing. The sellers are growing in number. I'm looking at it as a whole. I look at the slope of my movement, and I also look at the slope of my approach to the resistance level. How's it approaching this time? Look at my acceleration. I'll actually go back and check the slope of my movement. Once I approach the zone, look at my downward legs. Is the acceleration increasing or not? See? The slope is gradually getting steeper, so the speed of movement is increasing as it approaches this zone. So I'll take less risk here when it comes to going long. Let's look at another spot where we got close again. This is a place where I have a high chance of winning it. The acceleration is decreasing. See? How does acceleration decrease in general? The speed has to gradually slow down for me to see that the acceleration is also dropping. The speed of this step, the speed of this decline. Look, I'm connecting the peaks of the fluctuations to the troughs. The speed of this is the speed decreasing as it approaches the support zone? Yes, the speed of the downtrend is decreasing, and it can create a higher win rate for a long trade in this area for me. Well, it mostly requires you to watch the video a few times. You need to take notes, look at the PowerPoints I've provided for you again in the video, prepare a study guide for yourself, and then start practicing. This topic of distance and depth, which I'll also discuss in future sessions, is about momentum, meaning analyzing the speed and acceleration of movement in uptrends and downtrends. Draw your own support and resistance levels. Now, take a look and see what the acceleration and speed of the current trend were like in those places where a reversal from support or resistance occurred, so you can gradually get the hang of it. Now that I've reached a resistance level, is the acceleration and speed of the uptrend decreasing or increasing? I've reached a support level. Is the speed and acceleration of the downtrend decreasing or increasing? This helps you so that eventually, when you look at the chart, you won't have to keep drawing these lines just to see if the acceleration is decreasing or increasing. I can see at a glance if the slope of the movement is steep or shallow. There's no need to draw lines. You can easily see these with the naked eye. And that's exactly what price action is all about. The philosophy of price action is that by looking at the candles, I can understand which direction the future trend is most likely to take. I hope you found this video useful. If so, you can support us with your valuable likes and comments. Be sure to share this video with your friends who are involved in various price action and technical analysis courses and might not have received the necessary data yet. Minimize your losses and be successful.